best. You can be the King Kong banging on your chest.
You could beat the world, you could beat the war. You can talk to God, go banging on his door.
You can throw your hands up, you can beat the clock. You can move a mountain, you can break rocks.
You could be master, don't wait for luck. Dedicate yourself and you go find yourself.
Standing in the Hall of Fame,
Yeah,
and the world's gonna know your name.
yeah,
'Cause you burn with the brightest flame,
yeah,
and the world's gonna know your name. And you'll be on the walls of the Hall of Fame. You can go the distance, you can run the mile. You can walk straight through hell with a smile.
You could be the hero, you could get the gold. Breaking all the records they thought never could be broke.
Yeah, do it for your people, do it for your pride. Are you ever gonna know if you never even try?
Do it for your country, do it for your name. 'Cause there's gonna be a day when you're
Standing in the Hall of Fame.
All right, let's take our seats so we can get rolling. We're a few minutes behind here. Laugh him up for me.
Alright, it's rolling.
I'm sorry, Charlie Murphy. I was having too much fun.
Well, sometimes I go out by myself and I look across the water and I think of all the things what you're doing, and in my head I paint a picture. 'Cause since I come home, well, my body's been a mess, and I miss your ginger hair and the way you like to dress. I want you to come on over. Stop making a fool out of me. Why don't you come on over, Valerie? Did you have to go to jail? But your house on up for sale. Did you get a good lawyer?
All right, let's take our seats.
Hope you didn't catch a 10. Hope you found the right man who'll fix it for you. Are you shopping anywhere?
Good morning. How we doing today? Congratulations to Dominic, our big winner last night, owner of a beautiful new Omega Speedmaster. On behalf of the board of directors of Traders for a Cause, I want to welcome everybody this morning. I know it's kind of tough after a long night of poker to get up and get down here, but got a nice breakfast in the hallway. Got some great speakers today. I want to thank all of the sponsors who made this happen, particularly Clear Street, for keeping our lights on with their commitment to Traders for a Cause. Let's give it a round of applause for Clear Street, please. You're going to hear from them in a little bit. They have some really exciting news to share. But I want to give it back to our MC for the weekend. Let's give it up for Sang Lucci. Are you going to bring them on? You're going to Clear Street. Oh, no. Okay.
All right. Good morning, good morning, good morning. It's a long day. We're already a little bit late. I just wanted to say before we get started and before I intro our speaker, it's about the stories. The 2 days since I've got here, Thursday I get here, and immediately, you're recognizing people, you're seeing old faces, and the stories that you hear from all different types of traders, from all different types of places in the world as well. It's the stories that inspire us, that inspire me always to keep going. Have a reason for doing this. That's why Traders for a Cause is here. You guys are all going to make the money that you're looking for. All of it is going to happen. There's so many new people. How many new people do we have this year? You see what I mean? And from last year, you know, from last year. You guys saw all this and you wanted to be a part of it. And do me a favor. Do me a favor. Find your group. Find your community in here. How many of you guys are small cap traders? Raise your hand. Okay, so majority here are small cap traders. Who's the options? What do we got for options? All right? Keep your hands up. Keep your hands up, though, for the options. All right? Look around the room. Find these guys. Find these guys. Talk to them. Make sure you find your crew here, because these are the people that chances are you're gonna spend 8 hours a day in a damn chat room with them. You spend more time than your own family with these people. All right? Get to know them. It's amazing, the stories that you will hear. There's a lot of traders that come here too that don't even come to the conference, but they're lurking around. They're lurking around, they're having dinners, they're going to clubs, and they're here just to connect with all of us and all of you guys. So all the new guys here, thank you so much for coming and supporting Traders for a Cause. We're gonna get this underway right now. Zach, do we got Clear Street coming up, or is it Kyle? Okay, our first presenter, one of the Clover boys. I don't know if you guys are aware. He'll tell you as well. His name is Kyle Williams. So I'll give him a round of applause. Good morning, everybody.
Testing this thing on. Testing, can we hear me? Hello? Good morning? No. Good morning, how are we doing? Woo! All right. First up, all right, no pressure. So my name is Kyle Williams. I've been trading for about 8.5 years now. And today's topic is going to be on the dualities of trading. I guess not the inspiration, but the idea for this presentation is that we're obviously in an election year. If you turn on any news, there's going to be the extreme left, the extreme right. And the reality is most of us are probably somewhere in the middle. And I was like, what are some of the extreme topics of trading, right? What are the dualities, the total polar opposites that traders tend to either really favor or start to even maybe debate about? And so we're going to just go through some of them. I'm going to share my thoughts, and ultimately all these are going to be somewhere in the middle. You're going to have a little bit of both of everything to be a really good trader. And so yeah, let's get started. So first one is risk-reward ratio versus your win rate, right? Every trader seems to find the style that they find that works for them, but obviously understand you need both to be profitable, right? You can't just only have a win rate and not have a risk reward. It doesn't work like that. It's an equation that whatever you have for both gets you how unprofitable or profitable you're gonna be, right? If you have a 1-to-1 risk reward, but exactly a 50% win rate, you're just coin flipping all day long, winning 10 bucks, losing 10 bucks, you're gonna be break even, right? Now, let's look at the extremes. There are some people who take the 1% win rate approach, but want to win 1,000 to 1 risk reward. We call this the lotto ticket approach. I've met traders like this who all they want to do is catch the next Black Swan, catch the next HKD, catch the next TOP. And yeah, that's fun, but that's not really consistently profitable, right? You may catch the Black Swan, but how many times are you going to lose until you get to that point? That's why it's a lotto ticket approach. It's not really that efficient, not that effective, and frankly, probably doesn't really work, right? The other side of this is a more popular approach that I see many more traders do, which is like the 99% win rate, but maybe less than a 1-to-1 risk reward, right? It's the I'm never wrong approach. They'll keep winning, they'll constantly keep winning. Probably, I would argue, because maybe they don't even have a stop loss approach or risk management. It's just they can keep gathering all these wins time and time again. The question is, when you hit that 1% of the loss, what does that loss look like, right? Is it gonna be more than 1-to-1? It's gonna be 10-to-1. You take a 10K loss for every 1K win, right? How big is that loser when you lose gonna happen? Because it can wipe away all 99% of your wins in one trade, right? So that also can't be very efficient as well. I mean, it works for some people, but again, there's a big downside there. And again, you need a healthy mix of both. For me personally, I'm a win rate trader. Okay, I really don't like losing over 50% of the time. I like to be better, mentally better than a coin flip. I do think it makes me give away some efficiency, because in trading that off, I have to give up some risk reward. My career risk reward is only 2.5 to 1, which isn't, it's good, it's better than 1 to 1, but it's not like this 3 to 1, 4 to 1, 5 to 1, 6 to 1 kind of traders that you hear about that just crush it. But that's just because I like winning about 60% of the time. I think my career I win like 61, 62% of the time. And I do that by, in certain trades, I will literally wait to be right. Like I want to almost know that I'm going to be right more than wrong. And in doing so, I end up missing the entry that maybe has the great 6-to-1 risk reward, and I enter something that only gives me 3-to-1, okay? So, next one, longs versus shorts, right? There's a natural bias per style and per setup we're trading, right? Obviously, if you're a breakout trader, I think we can all know that that's a long bias setup. Although there are fake out breakout traders, which then naturally would be short bias, right? Now, it's not shorts' fault that your longs aren't going up, right? People tend to think, especially if you look on like Wall Street Bets or Reddit, right? It's like the short attack. The reason why the stock's down 50% is because shorts, right? And they don't even know SSR exists. It's also not long's fault that your shorts aren't going down, right? You know, I've been short plenty of stocks where they just aren't dropping, and I'm like, why aren't longs selling, right? When really there are probably other shorts just bidding it up because they're getting squeezed, right? In many cases, long and shorts can make money on the same stock in the same day, right? I've seen it plenty of times where I am short something, and I'm short for 3 hours, and someone's long for 5 minutes, and we both made money, okay? So really it's about time frames and how long you're in it or not in it, okay? Now, in my opinion, the correct way to look at this is not longs versus shorts, but it's the funds, the companies, the institutions, the big money, or as like Nate likes to call them, who's ever has an agenda with the stock, versus the retailers or just individual traders, right? It's about who actually has an agenda with a particular stock that needs to get it somewhere, and can you as individual trader identify what that is to either join the trend or get the hell out of the way, right? Again, it could be companies trying to get their stock price up to a certain price to unlock more dilution. It could be just a fund to manipulate the stock up to their agenda. Maybe there's always that common trend where the moment a company gets a delisting notice, it immediately spikes 100% the next day. Why? I have no idea, but I can speculate there's someone behind that. So that's why I look. I don't look at longs versus shorts. I look at individuals versus the bigger money or the promoters, whoever you want to call them. So next is fundamental analysis versus technical analysis. I think this one can be charged a lot because there's always that common famous quote from, forgive me, I forgot his name, of the market wizards who said, I've never met a rich technician being a technical analysis trader. And again, natural trader styles are going to gravitate towards either one. I think most people gravitate towards technical analysis because it can be easier and also can be a bit of fun, right? It's kind of like pattern recognition, right? You see little charts, green light, red lights all day. You see what a breakout looks like. You're like, I want to buy that, right? It seems very easy, very straightforward. Versus fundamental analysis, who wants to dive into SEC filings for hours and then maybe understand it at the end of it, right? It takes some more time than that perspective. Now, for me here, I think it's about time frames. And this is more a general statement, it's not absolutes, but I would like to think that technicals are more of a short-term focused strategy, right? A lot of scalpers, the day traders, maybe some small time frame swing traders, where, like for me, ticker XYZ, I have no idea who the CEO is, I have no idea what the company name is, it's just a vehicle. I'm just there to make my dollars and rock, right? I have no idea of anything about the company practically, and I just trade it, it's a vehicle. Vice versa, if you're looking for something long-term, you probably want to know how good their earnings are, right? Now, this isn't always true. There could be times where fundamentals play out immediately, like if you announce an offering, immediately the share structure is going to change, and that really matters, and you should know about those things. But also there could be long-term technicals as well, like a 52-week breakout. Clearly in the name, you need 52 weeks for that to develop. Okay, so it's not absolutes, but in general, I think short-term can be more technicals, long-term is more fundamentals. And so we'll look at some examples in my trading and in other people's trading of why this can matter a ton. So this is FFIE back in May. This chart is a picture of it after its reverse split, but it really went from 4 cents to practically $4. I think 3.90 was the high. And this is to date my biggest loss. Broke every rule in the book, stop losses didn't exist, and I lost around $390,000. Yeah, rough. So, and the reason why this is, multiple reasons. I broke every rule in the book, like I said, but the biggest reason was that I, for once, being a technical-based and primary trader, threw all technicals out the door and said, I know what this company is, it's absolute SHIT, and it's going to be back down to practically zero once this is all said and done. And if you look at it, if the high was, 160 after reverse split, so it was really 390, it's at $3 now, I think it's at 250 now. If they didn't reverse split, it's back at 7 cents. It's practically back down to its 4 cents where it started. And so yes, technically, yeah, Kyle, great, I was right, but my timing, which is huge in technicals, was completely off. I shorted, do I have a center point or a little thing? Here we go. I shorted on this third day where it went from practically, what is that now? 40 bucks to like 110, which was really 80 cents to like $2. Shorted 80 cents, didn't cover at 90, didn't cover at $1, covered at 120, reshorted at 120, covered at 2. Got obliterated, right? And the reason why I kept fighting it and was so convicted and like let that conviction killed was because I ignored the technicals completely. I ignored that it was front side. I ignored that it had hundreds of millions and arguably a billion plus volume shares traded on the day after it. I just ignored everything about it technically, and all I could think about was that this company's terrible. It's going to be back down.
actually in, you guys know Edu, Venezuelan guy? You guys know Edu, right? I'm actually in his chat room, and I started trading some of this small cap junk with you guys. And after listening to Kyle talk about fundamentals here on that FFIE, I mean, it's extremely difficult for me, after, of course, not knowing much about any of these companies, and watching them do the things that they do. I'm an options guy, right? So I'll see an SPX option do the same thing as an FFIE would, and we see that every day. But again, it's an option. It's priced differently. You look at some of these companies, I don't know what the hell any of this stuff does. I look at it, I'm like, yeah, short, short, short. I'm in Edu's room, and he's like, dude, be careful, be careful, be careful. I'm like, what are you talking about? Be careful. It's going to zero. It's going to zero. It's going to zero. It doesn't always do that. All right. Next speaker, first time presenting as well. We had an amazing speech last year from Kulamagi. This is the stock B. Pay attention, guys. Could be interesting. Pradeep Bond, give him a round of applause.
Thank you. Thank you. Okay, what I'm going to be talking about is a trade factory in the sense of like I see my trading as a factory which has distinct product lines and processes, and every day I run a trade factory, and if I efficiently run my trade factory, the output is money, and if I fail in running my trade factory efficiently, then I make losses. And this trade factory has evolved over the last 24 years, and it's the best version of currently what I am trading. And let me take you through this. Fundamentally, yeah, I'm pressing the green button. Okay. Okay. So the starting point for this trade factory is basically based on my understanding of the market in two time frames or in two types of moves. One is every day, daily, I study stocks which have gone up 20% plus in 5 days. And the reason why I study stocks which have gone up 20% in 5 days is one of the methods or one of the core thing which I trade is stocks which are capable of making 8 to 20% move in a week. So this everything which is derived in the trade factory starts with this study, which is like the understanding of what happens when a stock makes a 20% move, or second kind of a move which I trade is a longer term move or a slightly longer duration move, which is a stock which makes a 50% move in 2 months or less. So these are the two things every day I start with. Like today I got up at 6 o'clock. The first thing I did was like I studied the stocks which went up 20% plus and the stocks which go up 50% plus. This is a daily study which I do, and all the trade factory is derived from this study in terms of what happens when a stock makes a 20% move. How does the move start? How long does it last? What happens during the move? And how can I find it on the first day of the move? Similarly, stocks which make 50% plus move, what happens? And then on the weekly basis, I study stocks which have gone up 300 plus in a year. On a monthly study of monthly winners, plus I have a study of magnitude moves, study of duration moves, and study of persistent moves to find out stocks which have persistency, and I'll talk about persistency at the end of this thing. So what I'm trying to find out is how and from where moves start, how long do they last, and what patterns show up, and what kind of a catalyst can drive a stock to make the kind of moves which happens on a daily basis, and then incorporate that understanding into my trading factory and continuously refine the trading factory based on the latest understanding, because the market is an evolving thing. What used to work 10 years ago, 20 years ago, I started trading 24 years ago, no more works in the same manner. So this study helps me to be in touch with what is happening and what is working currently. Now there are two different types of, like as I said, like I run a trade factory, and I see my trade factory as having two distinct product lines. One of the product lines is these singles, or these are like in stocks, which will move my stock, which will move my account in an increment of 0.5% to 5% at best. So one single trade will move my overall account by 0.5% or 5%. These are what I call as singles. These are like in stocks where I might buy a position for 2 or 3 days, and the stock, I'll buy 25% of my account, I'll put it in it. It goes up 20%, it moves my account by 5%. Overall capital, it moves by 5%. Or many times it will move your account only by 0.5% or 1% or 2%. But these are all singles. So that's one distinct product line which I run, which is singles. And there is a second product line which I run, which is like home runs and mini home runs. A home run or a mini home run is a trade which will move my account by 10% to 50% in one trade. So I look at these two as two distinct product lines. They are totally different way of thinking, and they are totally different way of trading, and both of them I run in parallel. And the reason I run both of them in parallel is the singles, and I do a lot more singles than I do home runs, because it's much more difficult to find home runs or mini home runs. It's much easier to find singles. The singles allow you to finance the home runs and mini home runs, because there's a difference. When I'm trying to find a single, I'm risking very little. When I try and find a single, my stops are less than 2.5%. I try and find situations where I can put a stop of less than 2.5%. So, but when I'm wanting to get into something which is basically a home run, I need stops of 8 to 20%, sometimes even more than 20%. So if I continue to take trades which will require stops of 8 to 20%, and if it doesn't work out, then I'm going to be in a drawdown, and I don't like being in drawdowns. So what I've done over the years, and this took many years to understand, or some years to appreciate and understand. Today, if you ask me, and many traders come to me, as most of you know, I run a service, and I also talk to a lot of traders who are not in the service also. And the biggest problem I see is many traders who are starting out have these home runs or mini home runs mentality. They think that hitting singles is below their dignity or something that they don't want to do, right? I have so many people who, like once Kristen Kulamagi became famous, I have so many people who write emails to me from Sweden or one of the Scandinavian countries saying, hey, I'm like in so-and-so, I'm like got $10,000 I want to do, and I just want to trade episodic pivot. I don't want to do anything else. The problem is, if you're going to be trading episodic pivots, they don't happen often. In a year, you'll be lucky if you get 3 to 5 trades. And those 3 to 5 trades are going to require you a stop of 8 to 20%, right? If it doesn't work out, then what are you going to do? 5 trades don't work out. You're going to be back to finding a job. So singles is the foundation of my trade factory, and I do a lot of singles, and occasionally I find home runs, and more often I find mini home runs. So singles
See, though, was all the time that he spent on the data and all this time he spent looking at each one of these individual stories. I have a couple stories. Mine was Ozempic. You know what happened to me? I'm strolling around Puerto Rico. And Puerto Rico, remember, if you've been to the islands, any of the Caribbean islands, they eat a lot of pork. It's a lot of pork. And I go to a barbecue, and it was literally 50, it was a family of 50. They were all over 200 pounds. Every single one of them was on Ozempic. Every single one of them. And they were all telling me that their insurance company only covered maybe a month or something like that, and they were all school teachers coming out of pocket paying for Ozempic. And I'm like, come on. I pull up Eli Lilly, it's trading $300. Of course, I start pushing it in. And then they said in 4 years, they predict that sales are gonna be at $1 billion from 100,000. And surely enough, in 6 months, all those stocks doubled. And then everybody was coming up with their own products and things like that. So it's about the stories. Another thing I took away from him were these damn sugar babies. Be careful, guys, all right? You look for these sugar babies too much, they'll take 20% of your income. By the way, I'm taking applications. All the ladies in here, you guys are gonna be rich. I'm looking for sugar mamas, all right? Now, coming to the stage here, let's keep things moving. We have Lana and Ashley from Clear Street, and they're gonna talk about the new platform on Clear Street.
Thank you. Good morning, traders. Thanks for being here at the 11th annual Traders for a Cause. How great is this to come together and learn and raise some money for some good causes? I am Ashley Miller, and I am part of the business development team at Clear Street in New York, and we are thrilled to be sponsoring this year. You've got a fantastic lineup of speakers, and before we continue with them, we have a very exciting business update from Clear Street. Looking around, I see a lot of familiar faces. Many of you have been trading at Centerpoint Securities for many years and know that Clear Street acquired Centerpoint 5 years ago. So while we have been one brand, we've now grown our infrastructure so much that we're ready to fully integrate them. And what that means for you is that while Centerpoint's website will stay up through the end of the year, going forward from today, all of our communications will be from Clear Street. So when you call in, you'll still get the same amazing customer service that you know, and you'll just have Amanda and Sean and Emily and Amanda answering the phone as Clear Street, but it's still that great support team. You'll also still have access to our really robust locate inventory and, of course, our excellent routing options. Additionally, you are gaining access to our incredible technology. Clear Street was founded with this idea of increasing market efficiency, and we're really achieving that in large part with our proprietary, brand new, all-in-one portfolio management system that is API first, and that is called Studio. In a moment, my colleague Yana is going to talk you through some of the technical aspects of that and how it's really going to impact your trading. You're also gaining access to more partnerships with Clear Street. We've recently partnered with T3, so later in the program you'll hear from Derek Oldensmith. If the way he trades resonates with you, know that when you have an account with Clear Street, you can gain access to his virtual trading floor room. So you'll get to be a part of that community and hear those trade ideas and have that sounding board supporting you. So moving forward, you'll have access to our great technology, continue to have white glove service, and of course, all of those additional resources. I'm gonna play a brief intro video for Studio. Enjoy that, and then you'll hear from Yana. Thanks, gang. Oh, back.
The financial industry still operates on infrastructure from the 1970s. Clear Street is on a mission to change the game. Introducing Clear Street Studio for active traders. the all-in-one platform designed to deliver powerful front-to-back-end asset management tools and a revolutionary client portal in one integrated experience. Find your edge with exclusive tools designed to provide the speed and efficiency demanded by active traders. Easily access real-time risk exposures, margin data, and P&L at the touch of a button. Better insights, advanced analytics, real-time data, and streamlined automation. ClearStreet Studio is API first. Reduce your dependence on manual processes by automating directly with Studio's modern APIs, saving you time, money, and minimizing human error. Our platform is built directly into the cloud, reducing risks and facilitating growth. Available as both a web-based and desktop application, Studio can be customized to fit your unique needs. And the best part? ClearStreet Studio comes at no additional cost. Get full access to Studio's tools from day one, allowing you to focus on what matters most, your trading. Whether you're an individual trader, trading group, or proprietary trading firm, ClearStreet Studio can help you drive alpha and empower your decision-making. It's time to modernize the brokerage ecosystem with ClearStreet Studio, designed for your growth.
All right. Good morning, everyone. Good morning. My name is Ivanov. I'm part of the product development team at ClearStreet. I focus primarily on building systems and tools for active traders just like yourselves. I'm really excited to show you some of the highlights of Studio and some of the product features that we've been working on. ClearStreet Studio is our proprietary risk and execution management system. Through this tool, you'll be able to monitor your real-time performance, positions, margin requirements, trade, and also maintain and access your located inventory. I think sorry guys, we skipped one. A lot of the data sets here on every single risk-related page are customizable. You have a lot of data through the column selectors. On the risk-related pages specifically, you'll be able to see real-time positions held at ClearStreet, as well as real-time performance. You'll see the P&L and market values update and tick as prices change as well. With respect to risk, our internal philosophy is one of transparency. So we have built tools for our clients to allow them to not only see real-time, sorry guys, some of the slides are skipping. Not only be able to see real-time margin calculations as you see on this page, but this margin tool, for example, will also allow you to simulate the proposed trades you would like to make and the impact those trades might have on your margin requirements. So with this simulation here on the top right-hand corner, if you flip it on, you'll be able to bulk upload a CSV of 12 trades, 1,000 trades, whatever you like, and we will run a calculation for you that will show the impact to your margin requirements. So no more taking time out of your day to try to guess what those are going to be or even calculate them, and of course no surprise margin calls with this tool. Now all this information is good and well, but what can you do with it and what can you actually do to manage your risk? Well, we recently launched a Studio trading platform. This is our proprietary internal trading platform, and similar to a lot of traditional systems, it has level 2 market data, access to algos, DMA, order blotters, all that good stuff. But because we've prioritized active trading specifically, we've really streamlined a modern UI so that you can have access to the most relevant and important information for your day-to-day, such as real-time buying power, which you can see at the very top of the screen there. We've also made a lot of very interesting integrations, one of which is with TradingView. So we have access to their most sophisticated and advanced charting library that's directly integrated into Studio. So you'll be able to access several charts in one panel, and also you'll see your open orders actually within the charts themselves, and you can cancel them there as well. Another really unique integration that we made is with our own internal stock desk APIs, which actually allows us to use the order ticket to let you guys get locates should you need them to place a trade. So with this flow here, as soon as you type in a quantity, not only will we know, of course, if you're selling long or selling short, but if it is a not easy to borrow stock, you'll be able to repurpose the order ticket. As you can see, instead of the submit button, it says get locate, and we will know not only how much inventory you have left in that specific symbol, but how many are actually reserved for any open or outstanding orders. So you will be able to grab or get a request, and then get an offer for the amount of locates that you need to actually place that order in real time. So you're no more having to go to a separate screen or let alone a separate system to try to calculate what do I have left, how much is outstanding. We do all that calculation for you. So if you have to make a really quick decision, you don't need to overpay for locates either. Within the order ticket itself, we really prioritize time to order submission. There's a few other kind of really great, down to tabbing logic. We really try to make sure that being able to place an order as quick as possible was the priority for us here. So for all the shorters out there, you know who you are. This one's for you. We also built this locate monitor. This is the locate home base. So here you'll be able to see your entire locate inventory, all of your pending requests, locate details, a historical audit basically of everything you've done for the day, if you need locate IDs, all that good stuff. And on the right-hand side, you're also able to access our stock loan desk APIs. And you'll see all the offers. You can have multiple offers up at once. There's multiple places to accept or decline. It's a really, really great interface. So we really wanted to make everything under one roof for you so you have access to everything that you need during the day. One thing I'd like to reiterate is definitely that ClearStreet is an API-first company. Everything that you have seen here that's available through the web platform is also available via API. You can, of course, trade algos, DMA. We have a lot of extensive documentation that I would really encourage you guys to take a look at. We have SDKs in multiple languages. We do offer a REST API. And right now we do have a wait list, and we're white gloving folks on every other day, and we're really taking feedback into account. The CTO and co-founder of ClearStreet is really passionate about this, so we brought the big guns to develop this API product. If you have any questions about it, please let me know. Please let anyone at ClearStreet know. We'd love to speak with you about it and schedule a demo if you'd like as well. In 2025 and Q1, we're launching options execution, futures execution later on in the year. We're also going to be launching our new version of the desktop application. Let's see, mobile app for sure is coming next. I'm really passionate about that. And definitely international equities by the end of the year. So that's some of the quick highlights. Please let me know if you have any questions. We'd love to show anyone that's interested a little bit more at any time. And yeah, I think that's it. Thank you.
Whoa, is that API a cost? Is there a monthly cost to it, or it's free?
No, sir.
You know what? This is huge. I mean, so far what I've heard on that, the new platform there, it looks pretty sick.
Thank you.
I used to pay Sterling $2,000 a month just to use their damn API. What a shit show. Breakfast is closing up, guys. Last call. How you guys doing? Everybody good? Yeah? All right. All right. Remember, we got the silent auction going on. Get your bids in. Coming to the stage here, we got a new presenter. His name is David Prince, and he's going to talk about trading beyond the charts here. Let's welcome our new presenter.
Really? Oh, thank you.
Dude, you guys both.
How'd it feeling? We alive? Cool. First off, thanks for having me. This is first time. I did an offshoot of this last year. This is different. It's kind of fun to be here. So I hope I'm entertaining because I don't have any fancy stuff to give you. I have no charts. I'm going to talk from in here. So I have the secret to trading. I'm going to tell you how I came up with it. And I'm kind of joking and being facetious, but it's about my history and what I learned is important and what I learned isn't. And I can positively tell each and every one of you it's about EQ, not IQ. So anyone who thinks they're not intelligent enough or they don't really know, it's about the mind. I'm damn sure, especially for new people starting out. So my history really in short is I was a private money manager, did institutional accounts and high net worth people. I knew I didn't want to do it, but it was a way to get into the business. Then I went into banking, did a lot of VC, got lucky with a lot of deals. I have a merchant bank called Broadband Capital. Did a lot of cannabis deals. We were the first cannabis deal to go public through a big wirehouse, JP Morgan, Hydrofarm, did Immunome. And me and my partners realized we're not like the smartest guys in the room, but we know the smartest guys in the room. So we like to back jockeys. And it's historically how I run money. I like to find people smarter than myself, and I like to put money with them. So genius concept, let me tell you, just unbelievable. Really, a lot of this business you're gonna hear is about this chart and this breakout and this, fruitcake chart that has an upside down W that's about to make you rich. And a lot of that stuff is, everyone has it. Everyone sees the same stuff. So it's how over 30 years I figured out what actually makes a difference. Like how do you make a bona fide trade and have something over the next guy? Because every one of you sees the same thing. You see the same charts. With CNBC, we got the same fundamental analysis. So what makes you have an edge? So after 30 years of doing this, I feel, I've helped a lot of people, and I feel I have an edge. It's worked. It's worked for like hundreds of guys, and some of them are geniuses. Some of them are complete idiots and can't tie their shoes, but they've made money still. And it proved to me, wait a second, there's something to having EQ. So I'm going to take you through some stories that maybe kind of give you some bona fide analysis of how this works. So let's go back to COVID. I talked a little bit about this at another event I did. During COVID, the world was ending. We didn't know if we'd be around. You didn't know if your mother, your father, your kids, or you would be alive. There was that moment of complete panic, and the world was ending. And the market's going down every day. And I looked at the market, and I said, so whether Amazon's trading at 15 times sales or 50 times sales or what earnings it's going to have next year, does that really matter anymore? Thought, no. The only thing that matters is Amazon is a way to live right now. Like, I'm going to survive through Amazon. And if I die and I'm worth 10 million or 50 million, it won't make a difference. So I'm buying Amazon because it just became the most important company in the world to me. Hands down. Can't survive without it right now during COVID. And it turned out to be a huge win. And as any of you know, it was the first real, big cap tech stock to win during that period for obvious reasons. I'm going to take you to another weird story. And part of what I'm going to tell you is small cap, medium cap, a lot of these stocks are there forever for a reason. They don't earn tons of money. So I really believe if you're going to play in that arena, have an edge. Like know who the management is, know what the business model is, know something that maybe gives you an edge it's going to work. So let me give an example. There's probably 50% of you here who say, I don't listen to CNBC, it's so dumb. Like, seriously, I get nothing from that. I don't want to listen to those bozos. I meet guys like that all the time. Here's what I do. I say, let me have every advantage possible to create more EQ beyond IQ. What does that mean? That means that half the traders out there are not very intelligent. It's by their choice. They choose not to acquire information. I think the ultimate nirvana in this business is to acquire as much information as possible, to make yourself as smart as the guy who went to business school or young lady, and not to let that intelligence interfere with your mind. In other words, be humble. So here's what I do. I listen to CNBC. Whether or not I agree with Jim Cramer or Josh Brown, that's not the point. There's information that I can trade off of short-term and long-term I might get. So during COVID, there was this SPAC that came out. And by the way, some of my history is SPACs are like one of the worst products ever created. I helped create them. I did Jamba Juice and American Apparel, and they dilute the hell out of people. They're like awful business model, but I understand them well, and I understand why they weren't going to work. But during that crazy period in 2021, here's what I did. I was listening to CNBC, and I heard VTIQ, EV company. They're going to do like crazy trucks that don't need gas, and they're going to be like EVs. I was like, oh my God. When everyone hears about the next Tesla, which by the way, clearly not, but I was like, this company may not be in business in 2 years, but there's only one EV play, and it's Tesla, and everyone wants the next Tesla. What the hell is going to happen when this story gets around? And I'm listening on CNBC, VTIQ, and I said, God, people are going to go bananas. So during this period, I buy tons of stocks at $10 SPAC, and I'm really a big cap guy. My buddy, I'm sure many of you know, Scott Redler, says to me, Prince, like, why are you buying some small cap $12 stock every day? And I said, because when everyone hears the story, interest rates are at zero, these small stocks move, and when you hear about the next Tesla, what do you think is going to happen? Do you want to be the guy who's buying some company that probably has a broken business model that won't be in business in 2 years at 50, or do you want to sell it to the market when it's 50? So sure enough, I sold it to the market at 50 or 60. It became Nikola, by the way, VTIQ. And I said, guys, this is silly. Like, it's worth billions of dollars. I don't even know if it's around in 2 years. It's the silliest thing. And then I said, during this period, while interest rates are low, this is working. Go back to what the hell works. Don't be smart. So all of a sudden there was this XL, and it was another SPAC. And I said, by the way, probably won't be in business in 2 years. But the CEO of this SPAC, I did American Apparel with. And this guy's a home run hitter, John Ledecky. Again, going back to follow the leaders, know who people are, educate yourself. Don't just do any SPAC. Do the SPAC where you think Jim Cramer might talk about John Ledecky. By the way, he did. And even Jim Cramer, well, no, if you guys bright as can be, but so I want to be polite, but what he did do is he said the stock should go higher, said it should go to 30, and in a day it went from 15 to 30. Anyway, I sold XL then. And then we went to HYGS. I stayed among a theme that worked. I backed a bunch of smart jockeys in the SPAC space, and I also said, guys, there's no meat on the bone here. This is a story, so let's get out. Now, I'm not going to say I don't have losers. I have them all the time. My point was, by using some EQ, and that fellow said something so smart before. He said, by being so disciplined and not creative, you're actually not going to make money. I totally subscribe to that theory. Educate yourself. Think about what is your edge. So creativity has always helped me, and knowing who the players are. And finally, what's maybe most important I want to really dwell on here, it's called climate. Know what works and what climate. So during 2020, 21, it was a silly climate, right? They were giving money away for free, so silly stocks worked. Now in 2022 and 23, you had a lot of newer traders buying stocks because they were down 50, 60%. Those stocks usually go down another 40%, which means you can still lose a bloody fortune.
And that's how you're gonna, by the way, 20 years after doing this, you're gonna look exactly like these two gentlemen over here. You're gonna have a lot of stories yourself, and it's all about how you collect the information and go about the information. My crew is St. Lucia and Wall Street Jesus. We do options. So on the same China trades, you know, we're looking at Tepper, we're looking at all this stuff, but we're looking at huge options and millions of dollars being thrown into calls every single week, every single month. So that's how we use the same narrative. We're all looking at the same damn thing. But how are we processing that information, and how are we creating those stories? I have an office in Puerto Rico where there's all kinds of different types of traders, and the office is purely for that. It's just information. It's just stories. How do you talk to other people who have ideas and who are looking at things maybe a little bit differently than you are? There's crypto guys in there who give me these shit coins all day, and I'll take a look at them. I'll be like, all right, man, all right, let's take a shot. And you know, you never know. There's tons of markets out here. All right. Next up, we have one of the charities that Traders for a Cause is supporting. Her name is Kathleen Rommel, and she's going to tell you about Raising the Village.
Hi everyone, my name is Kathleen and I work with Raising the Village. And we're working with last mile farmers in Uganda to raise their income from $1 to $2 a day within 24 months and ensuring families have access to food, water, and health care that they need to survive. I want to start by thanking you all for inviting me here today. It means a lot to be trusted with a microphone, and so I'm going to start off with a confession. It's my first time in Vegas, and it's a lot. There's tables, there's lights, there's a cast of characters, and it's very clear it's high risk and high reward. But when I was walking around the tables last night, I thought to myself, what if there was a way to make it less risky? Like, is there a history book somewhere that has how much people are betting, how they played their hands, and whether they winned big? If I used those data points on my own hand, could I walk out of here a winner? Of course, right? It's not new. We see it in poker, we see it in baseball lineups, we see it in our Netflix algorithm. But what is new is using that same approach to end ultra poverty. And that's what makes the work at Raising the Village so special. We take a holistic livelihoods model and use advanced data analytics to amplify impact and do it at a cost that is 95% less expensive than a comparable program. Okay, so since 2016, Raising the Village has helped over 1 million people break the cycle of poverty. When the program starts, households are earning less than 75 cents a day for a family of 5. It takes them hours to collect water. Healthcare is a 3-hour walk away. They have no savings, and the small plot of land barely gives enough food for 2 meals a day. They have few opportunities to change the path they're on. But that's where Raising the Village comes in. We ensure communities have their basic needs met, fresh vegetables to eat, clean water, access to local health care, and we pair this all with training on organic farming, health, gender, finance. We provide seeds and tools and make sure villages have access to affordable credit. The result is a big push that means entire communities can earn more, and they do. In just 24 months, households go from earning less than $1 a day to over $2 a day. And all this change happens with a household level investment of just $110. That's for everything. That's for livelihoods training, input, clean water, personalized support, access to food. $110 per household, all in. By graduation, families are harvesting more. They're selling at higher prices. They're investing in small businesses and livestock and education. This increased income means that they're healthier and more optimistic about the future. But I know who I'm talking to, so let's put a number on that. At the start of the program, around 2/3 of the households are earning less than 75 cents a day. By the end, that number is just 5%. Said differently, at graduation, the ROI is 6x Raising the Village's initial investment. But it doesn't end there. After graduation, progress continues. And all the while, Raising the Village is collecting data, measuring impact. And that's how we know that 3 years after the program ends, when RTV leaves, the ROI grows to 18x. I know I'm biased, but frankly, I think that's pretty amazing. But keep me honest here, how does an 18x ROI in East Africa relate to Las Vegas poker tables? While those of us at RTV will never be able to predict a royal flush, what we are doing is using data to predict a boom or bust for last mile households. Our team is collecting thousands of data points. We're analyzing them in real time to determine what's making the biggest impact, and just as importantly, what's not. We're sitting down with the hardest to reach villages. We're asking questions, and we're customizing each program to meet the unique and specific needs of that community. We're looking at things like elevation, soil pH, whether the local market has higher prices for potatoes or beans. We're taking information at month 3 and month 6, and we're predicting the ROI at month 36, at month 60. We're using data to guide us. We're using innovation to lead the way, and we're taking calculated risks. That's how we're reaching that 18x ROI. It's how we've grown 35% year over year while keeping our community partners, impact, and low cost at the center of everything. And it's just the beginning. We've grown our impact in Uganda. We've launched pilots in the Democratic Republic of Congo and Rwanda. We've reached 1 million people. But by 2028, we want to reach 1 million people each year. So I admit, I'll never be able to read the poker table. I'm happy to leave it to the pros. But Raising the Village is pioneering the way that data is used to support ultra-poor households. And we're all in. So I'm hoping that you'll join us in the big bet for this. Please, if you find this approach compelling, get in touch. Because we're looking to end ultra-poverty in our lifetime. And thank you for being part of that.
All right, Kathleen, thank you. I think if there's one thing we take away from that is that we're all pretty privileged, aren't we? My goodness. From $1 to $2, that's insane, right? So I'm going to introduce you guys to a very important man to Traders for a Cause. Most of you know him already, but he is our president, and we're going to present a couple awards that we do every year. We started doing this a couple years ago, so let's give it up for Mr. Nate Michaud. Oh, he's coming right down the middle. Look at this. Are you going to do a backflip onto the stage, or?
Thank you. All right, so as you guys know, each year we have a couple awards that we like to do. We have two awards, and we have a nice honor flight video like last year. So for some of you guys that have been coming for 11 years, you guys may remember Derek Leon. This award is a special one to me and the community. Derek was a special friend of mine. He was one of the young guns that you could just always tell that he was all in. He wanted to win, but most importantly, he wanted to win with others and win for his family. And October 29th is 3 years since his passing. And 2 years ago, I had his family here to present the first award. I told him each year we're going to acknowledge someone within the Traders for a Cause family in his memory. And someone that shared similar qualities to Derek, someone who is hardworking, spending extra time helping traders, and doing things not once or twice a year, but year-round to help traders and expect absolutely nothing in return. And this year, I thought, rather than me presenting the award, Kim Ann Curtin could share a few words with a video and then present the award.
Aloha, everybody. Ralph Waldo Emerson says that self-trust is the first secret to success. And Emerson also says the only way to have a friend is to be a friend. Derek sounds like he was a friend to so many many traders. And this year's recipient has also been a friend to so many traders for all the years I've known him, and even before that. In fact, I can say that I don't know another trader, and I know many, that spends as many hours as he does meticulously answering DMs and tweets on X to be sure he gets exactly across the point that trader needs to hear. Never mind his contribution to this conference every year, to the traders he underwrites to come here secretly and in public. He is stopped in the hallway by baby traders and seasoned veterans, and he will give them his undivided attention, making sure they understand what they were asking a question about. And he will follow up with them weeks later, if not months later, to be sure that it's working for them. In fact, this trader has often not shared brag-worthy trades on public forums because he is so aware that other traders might try to duplicate a very sharp trade that they may not be up to. So to protect them, he won't even talk about these trades he's taken. This trader's work ethic knows no bounds, and his encouragement to new traders especially will be constantly teaching them how work ethic is so important. His work ethic is so incredible that his own brokerage firm initially thought that he had a collective working with him, and were stunned to discover that actually it was just him. This beautiful memorial award is named in honor of Derek J. Leon because he cared so much about trading and his family, and that can be certainly said for this trader. This trader is always mentoring, encouraging, underwriting, supporting, explaining, introducing other traders to other traders, all to try to help them develop their own self-trust. In Hawaii, we use the word ohana to describe family. And this includes not just the blood family, but the family you choose. And that ohana you protect. Your ohana you take care of. You give them a hand when they need it. But most importantly, you do not leave your ohana behind. This trader might be known as the R guy, and I know he means risk, but it could also mean rise, because this trader wants to see every trader he meets to rise to at least, if not above, his own level. That is a trader who, in my experience, sees every other trader as part of his ohana. And I'm sure by now you have figured out that that trader is the one and only Brian Lee. Brian, would you come up to this stage and receive the Derek J. Leon Award?
We need audio.
Oh, that's right, we have a video. It's worth waiting for, trust me.
You deserve. What's happening, guys? We have another Sunday. No, I'm just kidding. This one is for Brian. Brian Lee, congratulations. You deserve this award. You've done so much within the trading community, whether it is helping traders or sending traders here. You've sponsored numerous traders throughout the years, and you've helped friends of mine. So I appreciate you. I know they appreciate you, and you deserve this award.
Hey guys, just checking in from the future here to share a very important message. If you've been around the block, you might have heard of a guy named Brian Lee. Now, here's the thing. Among the sea of people claiming to help, to guide people on their trading journey, there's almost none who actually know what they're talking about and put out some really helpful stuff. But this Brian guy, he knows what's up. You might want to listen to him. He's an amazing guy, super kind, doing it from the bottom of his heart. And I have had the pleasure of knowing him in my past life. You might want to get to know him and listen to what he says.
Brian, Chukong-yong, congratulations on receiving the Derek Leon Award today. This recognition speaks volumes about your hard work, dedication, and passion to this trading community. It's no surprise today you're receiving this award. It's a well-deserved honor, and well done.
Congratulations, Brian. I'm so proud of you. You are amazing. I love you.
Congratulations, Brian. You've given so much to this community out of the kindness of your heart, and many of us are forever grateful. As you already know, you changed my life tremendously. Over 5 years ago, initially as a mentor, but now as a lifelong best friend. We've been through many ups and downs together, through trading and personal, and I can't thank you enough for always being there for me. You deserve all of your achievements and more, and I can't wait to see your future growth and success. Congrats, bro.
Hey Brian, congratulations on the award. You totally deserve it. Because of you, I was able to help my girlfriend quit her 9-to-5 and even bought myself a car this year. Thank you for everything you taught me. It changed my life. I am where I am today because of you. You're the best, and you're the exact person for this award.
Come on up here, big guy. Where is he? One more time for Brian.
Sorry, that made me really emotional. I looked up to Derek, and when he passed away, it was really shocking. I didn't know him, but you could feel how important he was to the community. And you know, I've kept in contact with his family and try to help them out as well over the last couple of years without even ever talking to him. And I feel like there are a lot of people who I haven't been able to talk to as well. And I hope that I'll have the same impact on them as well, like Derek did. So it's a really great honor to receive this award. And I just want to say, like, you guys kept it a really good secret. I had literally no clue. And I just showed up here not expecting to cry before my presentation. So thank you so much. I really appreciate this honor. And I'm so happy that we can remember Derek each and every year in the same spirit that he gave out to the community. Thank you.
All right, so we have one honor flight video and then one more award. So Damien, you can go ahead and play the honor flight video. Oh, actually, before that, yeah. So about honor flight, we did it again. Some of you guys are obviously new this year, but last year I talked about something that we were able to pull together. Shared a story about the connection, a relationship fostered here at Traders for a Cause. combining forces with Myra from Breast Cancer Research Foundation and using her philosophy that if you don't ask, the answer is always no. But if you do, at least you have a 50-50 shot. And for the second year in a row, Delta committed a plane, Wyndham Resort and Hotels not only sponsored the dinner, but as you'll hear in the video, they did something pretty amazing for the veterans. And you know, as a side note, we want more of this, and we want boots on the ground. We want to support and share stories that nobody knows about, and we want you guys to feel, you know, where the money's going. So, you know, as the founder of Honor Flight New England says, you don't know your why until you cry. So I think last year's video did that, and it was, you know, you could pretty much hear pin drops. So this year, Greg had the experience of going on an Honor Flight, so there's a little bit of that in there, and enjoy.
Honor Flight is a chance for veterans to be able to go to DC for the day and see the memorials. But beyond that, it's a chance for them to not only get a thank you, but be praised for their time, their service. It's something that the majority of veterans never had. At the beginning of the day, nobody really knows what to expect. And you know, you're going to get paired up with some random guardian, and so it's really neat to kind of meet them, ask them about their branch, or were they in the Army, the Navy, the Marine, you know, et cetera, et cetera.
I was teamed up with an ex-Marine. I have nothing but respect for him, so I couldn't be prouder.
And they get on that bus, and like for me, I know everything that's about to happen. I know as soon as we get into the terminal, there's gonna be a ton of people waiting there. There's gonna be bands playing, there's gonna be all these people clapping with signs. And just to be able to see them coming around the corner and like, wait, they're here for us? You're 10 minutes in and their eyes are already starting to get watery.
It was just awe-inspiring, you know, each step of the way. There were people, you know, there to just celebrate them. You know, you could just see that, the outpouring of love and support. You know, it's just one day, but you could tell it's gonna last, it's gonna stay with them forever.
Normally, you know, you've got to get a bunch of tickets and go through the normal security line and all that kind of stuff, just straight onto the plane when it's chartered from Delta.
I think there's expectations of what it's gonna mean to each vet. He was commenting all day long, like they're treating me like first class, and that's what really meant something to him, because when he came back from the service, it's just come back and go home, you're done. So this was something that he never had, ever. And even though it's 50 years later, it still, you know, meant so much to him. People out there actually do care, and it means something to them that, you know, I served for this country.
You know, you go on memorial to memorial and just everything hits differently. You know, you just see them walking and then they just stop. And, you know, I just saw Joe there put his hand on one of the guy's shoulders and just like, it just starts coming out. And then there's just like sort of this closure that, you know, maybe they never got and they never would have got if they didn't have a day like Honor Flight. When we showed the video in Vegas last year, I mean, just everybody, you could hear a pin drop, and everybody was absolutely moved, which then has now turned into a relationship with Wyndham, you know, hotels and resorts, and, you know, obviously Myra spearheading a lot of that as well.
It means the world to me to be here today, to see all of you, the greatest generation. You are our heroes. You made this country great, and we are so happy to celebrate you.
And then they doubled down this year and not only sponsored the dinner and then some, they gave every single veteran that was at the event 60,000 reward points, which was good for basically an 8-day vacation.
Would like each and every one of you veterans to pick any one of those 9,200 hotels and go away for up to 8 nights on us.
I don't think we could do it without the Traders for a Cause community. It's not just us up here writing a check, it's everybody, participating, coming, paying their way. And, as people start to see that momentum, they want to get on the train. And I think that's exactly why Delta and Wyndham and everybody else is starting to jump on, because it's such a feel-good moment.
Of course, it felt so good to be honoring these vets, but it's something that we can't do for the fallen ones. So we do what we can, but yet it'll never be enough, because there's some vets, unfortunately, didn't come back. So it's important to do what we can for the ones who are living, but to also do that and honor the ones who aren't living. That's what we all should do, is honor the vets and give them whatever we can to give them that honor that's sometimes long overdue.
I think it's important to continue to put money towards programs like this, because freedom isn't free. And we're here, in Las Vegas doing what we want to do because of people like them. What may seem like a very small gesture to you can be a major, major impact on their life.
All right, and now for the last award is Person of the Year, and the idea behind this one is somebody within the Traders for a Cause organization. And Helder, one of our board members, created this award a few years back and presented the first one to me. And it was a moment that says, basically like, we see you, we notice. And it was humbling. And each year we want to recognize somebody within the Traders for a Cause organization for their hard work, dedication, and helping make a difference. And Traders for a Cause was an idea that kind of came to fruition pretty quickly. And little did I know I was signing up for yet another full-time gig. It was unsustainable. And so we needed somebody to carry out this vision. We needed somebody who was going to devote themselves full-time to make this a success. What you see today is the end result. You don't see all the headaches behind the scenes. You also don't see all the fires that had to be put out. You see, I hope anyway, a well-run, seamless event that just flows from one thing to the next. Zach is up here today to present this award, but I do have a confession to make. We literally had a mock meeting, voted on who should receive it, and I went as far as letting Zach order the award for the recipient. Now, look, I do realize that was a waste of $150 of donor funds, so I am prepared to write a check to the charity in that amount. But congratulations, Zach. You are the Person of the Year. We appreciate you. Saying's got it. I'll take this.
Zach, congratulations, Person of the Year 2024. It's been an absolute pleasure watching you and this organization grow for over this past 10 years. Having this event here in Vegas become a better event each and every year that it happens is a direct reflection of you and your commitment. We all know how much Traders for a Cause means to you, and you should know how much you mean to Traders for a Cause. So thank you for all that you do, and congratulations again.
Zach, I want to wish you a big congratulations on getting this award. I was bummed that I couldn't make it to Vegas this year to celebrate with you. I cannot believe it's been 11 years since we started this charity and had the first conference in Vegas, and I appreciate you stepping up as the executive director to carry out the vision of the charity. Congrats.
Hey Zach, congratulations. Wish we could be there with you. Love you. You rock.
I can't think of anyone that deserves this more than Zach. I mean, where would we be without him? Perhaps most people know that he's been organizing this and all the other Traders for a Cause events for years now. The amount of work he puts in is staggering, and the results speak for themselves. It's hard to believe it's been over 10 years now when this all started. After Zach was sentenced to 80 hours of community service, he came to me and Nate and asked if he could do some of it for Trays for a Cause. It was from those humble beginnings that he went on to become the most dedicated person for Trays for a Cause and everything it stands for. He's developed a true passion for charity, a passion for making a difference in the lives of others, and a passion for passion fruit ice cream. I don't feel like shedding a tear in public, so I'm not going to tell you how much he means to me as a friend and as a brother. I'm not going to tell you how loyal he is, caring, supportive, funny, entertaining, and honest. He's just a truly great human deserving this honor. Zach, congratulations, and may there be plenty of success in the years to come.
Congratulations, Daddy! We wish we could be celebrating with you.
I can't wait to give you such a big hug.
We are so proud of you.
Way to go, Zach.
Congratulations.
We love you!
And just for the record, the community service thing, that was a joke. He only got sentenced to 40 hours.
Well, they got me good, didn't they? Oh my goodness. It takes more than just a person to put these things together. All the teams that have helped me over the years, all the volunteers from the board before we had a staff to help carry out our vision on the ground here. So to all the board members that have volunteered their time for the past 11 years, I owe this award to them. And there's just no way that this could come together the way it does without the help of all of them and with the donations from our attendees like you guys. So I appreciate this. I'm shocked right now, but thank you. Thank you very much.
The feels, you can feel them right now, right? All this for 11 years. All this for 11 years. There's a lot of different things that are going on, right? There's a reason why Nathan and Zach started all this in the first place. And one of the lovely things that we get to benefit out of this is the community that we have now together. All of us together that are coming here to Vegas, and hopefully we'll be able to expand out to some different cities as well. So spread the word. Spread the word. This is our community, right? We're watering the seeds of our community every single year. I look forward to this event every single year. And remember why we're here. You guys are going to get to the point, of course, where, yes, you have the money, and now you're looking for other things to fulfill yourself. And one of those things is obviously giving back. So round of applause again for coming here and for being a part of this amazing community. Our next speaker has been an attendee for a couple of years. This is his first time speaking. Give it up here for Stan Ivanov, and he's going trading EQ you versus you.
All right. So next year, don't make me emotional before you put me on stage, please. I'm still working on the quick shift, but it's there. All right. I can feel the heart rate rising, so I must be nervous. And there's no must. I am nervous. I'm terrified. I haven't presented in front of an in-person audience in probably over 7 years since my corporate days. But anyways, it's my emotion. We'll get through it. So my name is Stan Ivanov, and a little bit of background info. Or I'll just start this over again. My name is Stan Ivanov, and much like everyone out there, I'm a trader. A little bit of background info about myself. I started working, or I come from a IT profession, engineering profession, and I started that around the same time I started trading, which was 2008, 2009. And then by 2018, 2019, I had fully shifted my focus towards trading. Now, I genuinely have a passion for both. I still consult on the side, and I still love the IT aspect. However, one of the two aligns with my visions and goals better than the other. So before we get started, I'm not a professional psychologist or licensed, nor do I practice coaching. A lot of these concepts that we're going to go over require proper guidance in order for you to truly understand and feel and benefit their value. Luckily for you, we have Dr. Crawford and Dr. Katz in the audience, as well as Kim and Curtin, who this is the type of work they do. My goal here today is to share two things. One, what I believe is the holy grail of trading and how I realized or came to that realization. And two, the equation that I choose every morning when I wake up, which allows me to practice my craft in a sustainable environment where I can fail safely. Because I know I'm going to fail, and I need to do it safely. So, trading EQ, you versus you. So what is trading EQ? It's really just EQ, emotional intelligence, but we're at a trading conference, so I threw trading in there. That last part was a little bit of a joke, but I'm working on it, okay? I'm working on it. The reason why I said it's mainly EQ, but I threw trading in there is because that's your driving force, right? So what is trading EQ? Before we get to that, let's see what is IQ versus EQ, right? IQ is your brain's ability to process cognitive, or your cognitive ability, your brain's function to process complex data, solve complex ideas, pattern recognition, speech, all of that stuff. In a way, unfortunately, and sorry to break it to you, but IQ is something you're born with. Do you learn over time? Yeah, absolutely, you learn over time. But there are certain brains that just think differently. They work differently. So not much you can do there. You can improve, but tough to excel. Now, luckily for you, there's a thing called EQ, which is emotional quotient or emotional intelligence. And EQ is essentially your ability to understand, process, and manage your emotions and the emotions of others. So I have this analogy that I use, and I promise this is going to be the last time I use it, as I told my wife, and she said, "Take it out, please." And I was like, well, give me something to replace it with. And so I didn't get anything, so here it is. But it's the last time I'm going to use it. And that's how I learn. I learn through analogies, so that's just the only way I know. And also gifts. I'm very good at gifts. So the best way I understood IQ and EQ and how they're different and the relationship is by looking at knowledge and wisdom. And I know a lot of the IU members already know where this is going, so I'm sorry if you've heard it, but if IQ is knowledge and wisdom is your EQ, then knowledge is knowing that tomato is a fruit, and wisdom is knowing not to use it in a fruit salad. So it requires more than just information, it requires context, right? And with that analogy, we now can answer what is trading EQ. So trading EQ is the sum of all. It's all of your knowledge and wisdom, along with the ability to recognize and manage your emotions and how they interact with the market. So from here on, we start to apply trading EQ. How does that interact with the market? Because the moment you enter a position, you are now invested. It doesn't matter what your plan is or what you think may happen. The moment you enter a position, you're now in the realm of probabilities. The market is one giant cesspool of emotions, opinions, feelings, and facts sprinkled in there. However, there are no lies, only hidden truths. What you see is what you get. If that ticker just went from $2 to $5 and then from 5 to 8 and you think it's ridiculous, it's not. At that moment, at that time, in that context, it is worth exactly $8 a share, and there's nothing you can do about it. You can buy more, you can sell more, but your opinion is absolutely worthless. So, if you're able to understand the emotional complexities of the markets and how to navigate, and the emotional complexities of yourself and how they apply, not only will you be able to separate the hidden truths and put conviction behind those trades, but more importantly, you will learn what to avoid. Which brings me to the next slide of the important
Sometimes the knowing yourself part is the toughest part. Don't beat yourself up over the head if you can't figure this stuff out overnight. This stuff you saw them. These people are talking about, they've been doing this for years and they're still trying to figure themselves out, you know? So if you can't get it tomorrow, you can't get it the next day, don't freaking beat yourself up about it. It's coming, it's coming. All right, next up here, we got part two of the $1 Million Mistake from Brian Lee. I'm looking forward to this one quite a bit. Where's Brian? Brian's here in the back. We got the two emotional guys here, right? We had Stan here, and now we got Brian. So be prepared. These are also some amazing stories too. Brian, welcome.
Hi guys. All right. So 2 years ago, I delivered a presentation here at Traders for Cause. It was called The $1 Million Mistake. So it was about my mentee and how he was going through a really difficult time, how I picked him back up from just literally about being, quitting trading, and how it materialized for him. It was really well received, but ultimately it wasn't about losing $1 million or a blow up or a drawdown, something like that. And I remember Singh Lucci was pretty disappointed. He kept asking me questions like, what did you blow up on? And I was like, oh, you'll just have to see. And at the end, he was like, I thought we were going to be able to trauma bond. Well, Lucci, this time I actually am going to talk about how I lost $1 million. Not even that, it was more closer to 2. My hope here is that you guys are going to be able to learn from my mistakes, from my experience, prevent some of these things from happening to you, and learn from some of the systems I developed as a result. So here we go. Before we get into it, I'm going to have to explain a little bit of context because this is actually really important to the story. We were heading out of 2021, and like a lot of traders during COVID, I had a fantastic, COVID era. I was really, really ready to go. And I remember at the time, the culture, everyone was so excited. They were saying, hey, we could do this. Let's just 10x it next year. We're ready, we're primed in a position to have a really fantastic 2022. Everyone was talking about home runs, let's go bigger, better, everything has to be massive. Let's not even think about how small we are right now. Everyone was saying your size is too small. Whatever you're doing is not good enough. And I remember feeling kind of affected by this. This quote speaks for itself. This is something Kim shared with me. But it really just started to kind of seep into my mind at the time. Just, hey, 2022, let's go bigger, let's go better. Let's become one of the best of all time. So I remember at the end of 2021 saying, hey, after I wrap this year up, we're going to go in 2022, fresh, new ideas, everything. And I looked at my bank account, I said, hey, look, I don't need to wire any more out. It's not going to affect anything. At this trajectory, taxes are going to be taken care of in literally the first month or two. So let's not even worry about that. Let's just go big. I started looking into different types of strategies. How can we scale this up? Just things that typically just didn't enter my mind before this. And I remember just, hey, let's not wire anymore, because one of the criticisms that I got was, look, Brian, you wire out so much, you treat trading like a business, but if you didn't wire out and you just kept compounding your risk, would you not have just 10x your results? Why do you do that? And again, this kind of thought process just kind of planted a seed in my mind. So 2022 hits, we're off to a good start. Literally the first 2 weeks, we're up 550,000. And I said, look, this year we're going big. The liquidity and sizing became a really big problem. I mostly trade small cap, so that was something that I had to be aware of. I'll show you a chart real quick. So basically, all the entries you take, all the exits, everything is slippage. If you want a 3R winner, sometimes it becomes break even. Sometimes it's just 2R. If you want to lose 1R, you're going to lose 2R, 3R, and in this case, you get slipped. You could lose 5, 6, 7, 10R in this situation. So things were changing for me as I was growing, and I assumed that this is just part of the natural evolution of a trader. Okay, so the market started shifting, I noticed. Not only did my size become an issue, but in 2022, there were talks of inflation, there were talks of interest rates rising. The market started pulling back. And for me, because I was so focused on just like hammering it out and just becoming one of the best of all time, I just kept forcing the market. I kept forcing the trades. I kept trying to say, look, I'm not gonna size down right now. I need to be sizing up. What's going on? And I just kept taking losses like this, you know, $250,000, 100K, 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 just like this. It just started snowballing, but I just kept saying, look, okay, that's a setback, but this is just me growing, not really paying attention to the market. And there's a conventional piece of wisdom that I received that I didn't really know much about, to be honest, and I relied on it. And it said that the small cap market was insulated from the macroeconomy. These stocks need to do their own sort of thing, you know, every day they have to raise or everything like this. But what I didn't realize at the time was the macro was severely affecting it. So after this period where I'm just, you know, getting used to the size and everything like that, oil stocks started running because of the invasion of Ukraine. Now, I didn't really prepare for this too much. However, I had experience with oil sector. Oil sector is more heavy market cap, heavier float. The last time I seen it happen was about a year and a half from this point, and every single stock literally just died off. But whenever there's a sector, and you guys know very well about this China quantitative easing, that you'll see, you know, multitudes of the same stocks highly correlated. And for somebody who's a short, the worst thing you can do is be early to these sectors. However, because of my experience, I sheepishly got into these trades and took on quite a bit of exposure. So what happened was, it wasn't undue risk on any single trade, but multiple trades. So you'll see, you know, 8, 10 stocks up, and I might have been probably in all of them. And the thing is, when stocks move together, your risk is actually in outlier territory. Because typically when you take trades, you know, A, B, C trade, one trade might work, one trade might lose. But with the risk-reward relationship, you know, that one trade should hopefully make up for those losing trades. However, when it's all together, you can understand where the risk is. And that ultimately led me to getting closer to that 2 million drawdown at the time, and that was pretty devastating for me. However, I want to talk about geometric losses, because this is something that a lot of people haven't really focused on, and it's really important to the story. So you guys should be familiar with this chart, and if you're not, you need to understand this. As you're drawing down your account, you know, in the very beginning, it's going to be very simple to go back to break even. It's simple to recover your account. But as you notice down below, it becomes substantially more exponential. Like, look at 70%, that's 233% to recover, and so forth and so on. The absolute nature of geometric losses means that no matter if you're literally in year one, you know, if you're a veteran trader, 25 years in, 5, 10 years in, you can
ones that are going to help you feel or give you that sort of accountability when, let's say, you've lost your step here. All right, how many folks here trade biotech stocks? We have a lot of folks here? Okay, coming up here, next presentation here is Jason Napodano, and he's going to talk about biostock trading and investing.
That's bright. Okay. So I'm Jason Napodano. Most people call me JNap. If you follow me on Twitter, you see that my Twitter says biotech stock analyst, beer drinker, 6 handicap, and convicted felon. And all that's true. So for those of you who don't know me, about 7 years ago, I got in some trouble. I was a sell-side analyst, and I'm working for a private firm, and I published research reports on biotech stocks. But I was also trading my PA on the side, and the SEC didn't like that. There were instances where trades in my personal account had overlapped with research reports that I put out at the firm. The SEC said that was insider trading, and they convicted me. And in 2018, I spent 4 months in federal prison. Now, that's 1 month less than Martha Stewart, but what I found when I got out of prison in 2018 was that the effect on my career was pretty devastating. I was essentially unhireable anywhere back on the sell side or any regulated industry. But what was even worse was that I was blackballed from my brokerage firm and several other brokerage firms. In fact, I've been kicked off of more platforms than I care to remember. But what that effectively meant was that I could no longer put the skills that I had to work, either as an analyst for someone else or as a stock trader for myself. I had been doing this for 20 years. I was pretty good at it. In fact, I don't think I would have been sent to prison if I lost money. So with limited options, I did the next best thing, teach. And that's when I started Bio5C. Bio5C is independent biotech stock research based on a proprietary model of investing I call 5Cs analysis. I came up with the concept for Bio5C because biotech investing is a special animal. There are so many facets to biotech stock investing that I don't think exist in any other industry. And all of those different facets result in various different types of risks. And I've outlined a few of these risks here on this slide. And what I'll say is you don't need to be an expert in all of these areas to make money trading biotech stocks, but it sure helps. It sure helps to have a background in science, to be able to understand the disease, how the drug works, why it works, how patients with this particular disease are treated, what's the unmet need, and from a fundamental science standpoint, do you think this is going to work? For biotech stock investing, that's the ground floor. But there are so many other areas of biotech investing that present risk. It's not just enough to have a drug that works. You have to prove that in clinical studies. And that is no easy task. You have to make sure you enroll the right types of patients. You have to make sure your statistical analysis plan is correct. You have to make sure that you select the correct control. So many good drugs fail in clinical studies because of the plan. But after you've proved that, you still have to go to the FDA and get them to approve your drug, and that's certainly no easy task. There are so many different aspects of the FDA approval process with filing applications and advisory committee meetings, PDUFA action dates. If you don't understand this process, you can get tripped up. And then even after approval, now you've got a whole new set of risks, including insurance reimbursement risk, protecting your patents, hiring a sales force, managing expectations with the street. There are biotech CEOs that will tell you getting a drug approved is the easy part. Selling it is what's actually difficult. And in biotech, we have a saying, long the approval, short the launch. And that's because there are a whole new set of challenges for commercial stage biotech companies, especially the small ones. But moving back to the development side, there are non-biotech related risks to investing in biotech, and mostly those are financial. 95% of all biotech companies burn cash, and that's just a guess, it may be more like 99%. So at any given time, you always have this financing overhang. What's the cash position? Do they have enough cash? Is that going to be able enough to get them to the next step in their development? When are they going to raise cash? How ugly is that going to be? And then finally, the biotech sector, maybe like no other sector that I know, presents this constant risk of potentially getting leapfrogged. There are 750 public biotech companies. There are thousands more private. And while it seems like I learn about a new approach every day, at any given time, 10 companies are trying to do the exact same thing. And in cancer, it's more like 200. So how the heck do you invest in an industry when a biotech company can, let's say, have great data on Monday, they came out with news and their cancer drug did a 35% response rate, and that's fantastic because the current drug on the market only does 25%. And so that stock is soaring on Monday. And then on Wednesday, a completely different biotech company comes out and their cancer drug does 45%. So that stock that was soaring on Monday is now effectively worthless today. And so my concept with Bio5C was the way to come up to monitor all of these various different types of risk and identify the best companies with potential to succeed based on these 5 core areas that I call 5 Cs. I narrow down this analysis to the things that I think are the most important. And those are charisma, credibility, catalyst, cap, and cash. Charisma is my fundamental analysis of the science. How and why the drug works, what's the disease or disorder the company is targeting, is there a significant unmet need, how big is this market opportunity, what's the competition. My background in biochemistry, having worked at a biotech company and being an analyst for over 20 years, putting that knowledge to work. Credibility is after you determine the fundamentals of the science, how likely are these guys to pull it off? Has anyone done this before? What was the outcome? Has management done this before? What's their track record? Do they overpromise and underdeliver? Do KOLs and industry experts like this approach? Do doctors like this approach? How credible is this story? Cash, pretty simple. Do they have enough cash? Enough cash to make it to the next major inflection point. There's many ways that I look at cash. Absolute value, relative to the market cap, relative to their burn rate, how much more are they going to need? Again, relative to that market cap, relative to their burn rate. Doesn't take an MBA or a CFA to figure that out, but hey, I paid for those, so I might as well use them. And then cap structure is where I think so many biotech investors can get tripped up. Not understanding basic versus fully diluted share count, not factoring in warrants or debt. We value companies as analysts. We value companies based on enterprise value, not on stock price. You can have a drug that works, but if it's wrapped in a toxic shell, that's a stock that might not work. There's where we separate the company from the stock. And then catalyst is pretty simple. What's the next major valuation inflection for this company? Biotech investors are the most impatient investors, and that's because of all the various different types of risks I just spoke about. Financing risk, leapfrog risk. You have to be neurotic to be a biotech investor because the longer you hold that stock, the more you expose yourself to all those risks. And then, of course, all these things are interconnected. If you don't have cash, you're probably not credible, and that's going to impact your cap when you go out to raise cash. You might have a drug that works, but if that trial doesn't read out until second half of 2026, that's not going to be interesting to schizophrenic and neurotic biotech investors. Do they have enough cash to get to the next catalyst? Catalysts are what drives the stock. Charisma and credibility are connected. Cash and cap are connected. And so I take these 5 components, each C, and I give it a grade of A to F, 5 to 1 points. And then I sum up the scores, and I rank all those stuff.
All right, couple of items here before we head to lunch. We got one more presentation. If anybody's cold, we got hoodies in the back for sale. They have some sleeveless tank tops I'm going to take to Puerto Rico with me. We have an item here that has to close out today. There's a couple of bids on it right now. It's the NFL High Roller. 2 tickets. The Palms has a box suite at the Allegan Stadium tomorrow. Game's at 1 o'clock. So if anybody's a big football fan, who are they playing, Tyson, by the way, Raiders? They're playing the Steelers. I don't know shit about football since I left Boston. But anyways, you got a couple of, I think Tyson's the high bid on that one, by the way. So if anybody's interested in that, there's also, I don't know who the hell put this shit up here. Maybe it was Tyson. It's a bird puppet middle finger. So you put it on your finger and it's, I don't know, an extension of your middle finger. It's probably worth about 2 cents. It's like the Dogecoin now, and the bid's at 208. Anyways, check it out when you get a chance. The Sanlucci boys are going to walk around and give you guys a free access to a newsletter that we have. This will give you options, volatility levels, gamma levels, and a lot of the flow that we look at in our community as well. So for any of you guys looking for ES levels, SPX, and all that kind of stuff, the boys will have a scan for you right in front of you. All right, last presentation here, and this is actually good before we get to lunch. We got another new speaker, and his name is Max Ganick, and he's going to talk about the power of partnership. So again, we're talking a lot about teams, team trading, and hopefully Max will give us some insight on that. Come on up here, ma'am.
Hey guys, what's up? I think I just need a clicker, or Zach, am I good, or do I need a clicker still? I'm good? Cool, awesome. Cool, well, just a very quick background on me. I've been at SMB now for 5 years. I started in January 2020. But yeah, exactly. We can just click. Cool. So basically, like for me, from the beginning of 2020, awesome, thanks, until beginning or the midpoint of 22, it was just a trade after a trade, nonstop wins. Clearly, just an incredible market, right? Momentum market. In March of 22, I had my biggest win ever. I was up, I think, 850 on one of my biggest trades. I was at my girlfriend's place, and I was sneaking out at 4, or not sneaking out, but I was going to the living room to box a China trade, and I walked back in, and I'm like, babe, I think I almost just made $1 million. It was crazy. And then in July, I signed a brand new lease for my dream place in New York City. And then at that point, I started into a 3-month hole, and I drew down 1.2 million. It was extremely surreal, and it was that moment in which I questioned, what are my skill sets? What exactly am I doing? Am I gonna be this one-time wonder? Every single day felt super stressful. Every single day you were like, is this finally gonna be that turn? Am I gonna have that one green day and then finally bounce back from there? It was that moment in which I was trading with a group of people, but it was that moment in which we were like, this is the time to get serious. We need to focus our efforts on building the correct process, building out our team, and making sure that we can bounce back from this drawdown as a group. How are we going to grow from this way stronger? Now, everyone in this group, each person has their own strengths. So one of the biggest advantages of being in kind of a team trading atmosphere is idea generation. So, for example, you have A+ opportunities. You have those scenarios in which, for example, let's say the semis were going crazy quarter one. Who out there is going to be spotting the next new setup to swing or to join trend on? There are countless examples in which being on a call, like we'll start at 2 p.m. and we'll be discussing swing trades for 2 hours, right? Because there's so much back and forth and so much idea generation that is extremely beneficial. And we'll be talking about what kind of grade is this? Is this a trade that's going to be an A, B, or C? And going back and forth, right, with each person's skill set is super critical. Being able to discuss whether or not what variables make this A, B, or C, and especially coming out of a drawdown, right, we made it a priority to make sure that we are sizing things correctly. I can tell you right now that if, let's say, an A or an A plus trade is 75 to 100% of my daily stop, a B trade is probably 20 or 30%, and a C trade is 3 or 5. And the reality is that when I was drawing down in the middle of 22, I did not adapt quick enough to the change in the market. And what's funny is that I feel as though that this year we had a very similar situation. We had a incredible first half. Every breakout, every swing, working incredibly, right? On just a one-day, just like momentum strategy, right? And then come the summer, things are more mid-range, things are acting differently. If you ask me what I would have done 2 years ago, it would have been keep doing those vol trades, keep doing all that sort of stuff. But being held accountable and focusing on the process that our team created and discussing that day in and day out, it forces you to be in the correct mindset, to think through everything, to make sure that you're not trading on emotions or what you want, but on true edge. So just speaking about our call specifically, so I'm on call with around 5 different people. One guy is specifically a guy on my team, and then there are 3 other guys in which I've been trading with for multiple years. They're not specifically on my team, but we have basically created a team. And each one of us has a very, I would say, unique skill. One guy is really good at bringing up every single trade, right? He is fantastic at calling out this stock breaking out. This might do this, X, Y, and Z, right? And bringing to attention what symbols should be in our watch. There is another trader who is super selective. He probably trades the least of us, but he is extremely systematic. He focuses on when it is a playbook trade. When is this moment in which I will put that trade on, right? I will be like, this is the trade, buy here, stop there. I know that's that. And then there is the guy that is really pushing the call to put on risk when there is that A opportunity. So in terms of who each of these people are, I am the selectivity expert. My skill is I'm really good at putting on risk when it truly matters. A lot of that comes from the skills that we developed from the last 18 months. Separating out what you will risk on an A trade from a B and a C is super critical, because you want those A trades to be the thing that is going to determine your month, quarter, and year. I think that my win rate on A trades has to be 80-90%. why would I not want to put almost all of my risk on those trades? Now you might be asking me, well, if you're doing that, why trade B and C's? I mean, like, you'll make enough money, right? Well, through time, you could turn those B's into B pluses. You can turn those B pluses into A minuses, and you can turn those C's into B's. For example, there was this the AMD breakout, like mid-year, right? And not really like a huge strength of mine, but it's something that we developed through our team trading, in which I was like, this is something that I know that we would do. And I put on the trade. It was a starter for the overnight risk. That was a C trade for me. But now, as I build that out, and it worked out really great, I ended up doing quite well on that. And that is something that through that experience, I can now maybe over time bring that up to a B, right? Because there's so many opportunities in the market. If you can find ways in which you can put your own unique edge into a situation, you can develop that, and then you can grow from there. So a really cool case study is going to be the NVIDIA trade from January this year. So it was mid-year January, right? And NVIDIA was breaking 500. This was a trade that everyone was looking at, and we were, there was various ways to play this. So my strength is to put on real size, but for a move-to-move trade, right? I'm good at putting on that first leg of momentum. So I buy the breakout. It goes from 500 to 512, and then it trails out, and I'm done. But one
Congratulations to you guys sticking it out thus far. Let's go eat. Green Street Kitchen. Go down the stairs to the casino and walk towards the Serrano, the breakfast spot. It's right there. You guys will find it. Come on. All right, let's go eat.